Good morning, everybody. Happy Friday. Sorry for just kind of the last second getting everything set up there. Well, happy Friday, everybody. Today is March 14th, 2025. And we're starting off today. Today is contract rollover with the financial markets. And yeah, looks like we got an entry on nat gas. Um, I do want to point out a couple of things as we get underway. And we're going to need to go out to the cmegroup.com. And one of the things when we get close to or on contract rollover days and dates and things like that, last trade date and so on, we do need to make a good reference to, which contract has the most volume, most open interest, so we can have easy price movement. Okay, basically entering and exiting trades. Now, today I went out and checked the volume and open interest on the S&P futures. Now, today is that rollover day, but generally you will see a lot more volume on the back month contract. Okay, right now we can see that based on the last update, 2 million contracts still on the March contract, and the June contract is still not even 50% as far as total volume. We are seeing that the open interest is shifting from the front to the back month. Okay. But as we start to evaluate this and see what's going on with the contract rollover, is that we need to see that is the volume shifting. Okay. Now, typically on Monday is when you see everything kind of go into full effect. I get it. But what is normal around contract rollover? Do we have more than 50% on the back month as the front month is expiring or rolling over to the back month? Okay. This is often a very confusing time for a lot of traders, not sure which contract to be trading. Okay. And you can get a little more slippage and you can see some price discrepancies that might make you a little more confused. I do want to point this out, though, that the contract rollover at this point is a little bit slower. Okay. Normally, again, we like to see about, especially on contract rollover day or Friday, we would like to see at least about 50% of the volume on the back month contract. Okay. Now, this is just to make you aware that things are rolling from the front month to the back month a little slower, which often can lead to a little more volatility around the session open. People jumping out of the March contract and then coming into the June contract. And if you kind of look at how price might behave around that time as we get closer to open, and what would happen with the futures contract if people are moving from the front to the back month. Okay. So just become aware. Next week, next Friday will be last trade date for the financial products. Okay. So as we start to jump in to look around, I did get filled on nat gas, taking a break to the downside. Overall, we're looking for price to come down to demand. I do also want to point out that very often Okay, and very often when you take that Globex range, right, Globex range, and you compare it to the daily ATR, is nat gas has a tendency very often to be about 50% of the daily ATR around the open of the session. Okay, now going from the Globex high extending, so you've got about 28, 29 cents for the daily ATR. 50% of that is going to be about 14 and a half cents. Okay, so I use that as a target and where I anticipate price to be around the pit open. And we just saw the pit open at 9 a.m. Eastern on the natural gas. Now that does mark that we take that first 5-minute candle as part of an open range breakout trade. What stacks the odds more in our favor is understanding, that as far as the direction, that very often, and you can document this yourself, is when you take that Globex range and compare it to the daily ATR, and you see that most often price is about 50% of that daily ATR at or near the pit open, you can use that as a kind of a profit target, okay? If that area should line up with a demand zone or line up with a supply zone, you might have a trade opportunity, okay? So learn the personalities of the products you're trading. Right now, I've marked the high and low of the first 5-minute candle. We use this as a strategy called the open range breakout trade. Okay. Now, using that 50% of the Globex range, 50% of the daily ATR, okay, that's going to set where my potential profit target's going to be. Okay. Because it does happen quite a lot. Okay. And in your own observation, you can bring that up. Hey, good morning, everybody, in our live stream. Glad to have everybody. Oh, before I get started, we have 2 more $50,000 prop accounts to give away today. Compliments of the Elite Trader Funding.com, and I'll be posting those out there. We'll give kind of a quick little question and see who responds first, and our team will then reach out to you and get you set up. Okay. So throughout the session, midway, we'll be giving away 2 $50,000 accounts for you to start your evaluation and start your prop account. Okay. So good to have everybody here, and stay tuned for that giveaway. Now, crude oil. Okay. Crude oil got a large open range candle, and that candle is a little bit outside of my risk tolerance for taking the open range breakout trade. Okay. We had the 5 p.m. and the pit close, and it looks like price is coming back to that. Price is often attracted to that level, almost like a gap fill per se. Our Globex range, about 80 cents, compared to the daily ATR, shows that we're kind of in between that 40 and 70% range, which is usually a more choppy open of the session. Okay. So in that mindset, I'll be waiting just a little bit longer. How long do we wait? Well, in observation, you will find that there's peaks and valleys inside of the pre-market, like starting about 2 hours before the pit opens. We often see these peaks and valleys going on. Okay. So we're looking for the timing, taking the distance from, I'm just going to use this valley right here, over to the pit open. And generally, if price aligns with the demand zone or a supply zone, we'll have a trading opportunity about the same time going from the pit over, where we'll have an opportunity to potentially make a trade, but not for about another 35, 40 minutes. Okay. So we'll look for a price to be in a demand zone or a supply zone in about 35, 7 or 10:05 Eastern. Okay. All right. So nat gas, still looking for price to come down about 3.952. That'll be my profit target. Below that, we have a demand zone where we may look for some opportunity to catch the bounce back up. S&P futures. All right, here we are. Inside day on the S&P futures. As we mentioned before, the volume and open interest is still on the March contract for the most part. After session open, we'll start to watch that how that transfer of the front month contracts close out and go to the back month contract. Okay. As we're observing, we see Apple's up $1.28, Nvidia up 335. So kind of a bullish sentiment here at the open. Everybody anticipating a bounce and potential move back up. But take a moment and say, okay, well, things look a little bullish, but what is the volume like? Okay. Now, every morning, starting in about about 3 or 4 times each morning, starting about an hour before the market session opens, you want to be monitoring the volume on a Dow 30 stocks, large market cap weighted stocks. Okay. The S&P, NASDAQ, and Russell are large market cap weighted indexes. So the large market cap stocks tend to move the market more than the smaller market cap. Now we're seeing a lot of green and bullish price movement. Goldman Sachs up $8. Wow. Okay. But only on 11,000 shares. American Express up $4.57, only on 5,800 shares traded. Now, low volume does lead to higher volatility as traders come in and try to find where they can make a market. Okay. So anticipating a bullish open, okay, as we get closer to the session open, we have to anticipate that bullish open is on lighter volume. Being that the equity indexes, all of them right now, are inside the prior session's range, inside days often are a little more volatile as well. Okay. Now, that volatility does not negate a trade. It just says, hey, the traffic condition is a little more heavy, okay, and you could end up getting yourself in a little more trouble. A lot of slippage potential, fast price movement because of the low volume as prices jump up or jump down to find buyers and sellers. Okay. Now, characteristics of when the equity indexes are inside the prior day's trading range is that market conditions can be a little more whipsaw and choppy. We have a little extra piece of information that the volume is very light in the pre-market, also implying that a little more whipsaw and volatility. Contract rollover today. Okay. A lot of confusion. A lot of volume needs to shift from the front month to the back month. Okay. So, and on inside days, very often the gap fills the same trading day. Okay. Now, right now we're seeing the prior sessions close and the gap fill area, 5 p.m. gap fill, okay, is lower. Okay. So if we're expecting the price, the equity indexes to fill their gap based off of the inside day and so on, price must come down to fill it. Okay. It doesn't provide us with a short entry at the moment, but all these characteristics that I'm describing and outlining here are saying, hey, okay, we've got, things look pretty bullish today. Now, if price drops when we're already thinking that things are bullish, then our mindset's going to change. Oh, it's bearish. They're going to continue to sell off. Okay. Well, we expect the gap fill, therefore price must pull back we're expecting them to get out of the front month contract and roll to the back month contract. Okay. So price dropping around the open, finding our leg base group of candles down, and I'm going to drill into this right around the session close. Okay. And we're going to look for that pullback. Okay. Now, I'm not bearish in the market. From our pre-market routine, a couple of things that we did point out. Equity indexes, okay, from their all-time highs, S&P is down 10%, NASDAQ down about 15%, Dow down 10%, and Russell down 20%, okay? Now, these are fairly decent pullbacks, okay? Due to the light volume, okay, we might see some short covering come in. And for understanding the short covering, we need to be watching the trend, the tick, the VIX, advancing issues over declining issues for additional support that the big players are coming back into the market. We have noticed over the last 7-8 weeks now that the volume has been getting lighter and lighter when it comes to stocks. Okay. Why is this important? The stocks move first before the equity indexes. Okay. The stocks reflect what the indexes are doing and the exchange traded funds. Okay. Excuse me. Now, our exchange traded funds out there all have shown a nice downward sloping angle where 3 points confirm. Okay. And we're starting to see a potential gap. Well, we're seeing a gap up on price right now on each one of the equity indexes. SPY gapping up $5.08 at the moment. Q's gapping up $5.64. IWM up 220, and the diamonds up 225. Now, downward sloping angle and price breaking above that, this would classify as a breakaway gap. Okay. Breakaway gaps often have the price pull back into demand or supply. Okay. And I'm noticing something else here. Now, when I draw the trend lines here, 3 points confirm. Now, I'm looking at IWM and I got 1, 2, 3 points. So, the higher time frame looking for a breakaway, but having 3 points, this could also be a measuring gap, okay, or runaway gap. So I'm going to be defensive on both. Now, if it is a breakaway gap, then price often likes to retrace back into the gap area. Therefore, we're looking for the reverse leg base group of candles. Inside day, we're going to look for the gap fill, and the gap fill would be here on the Qs. That would be a sizable pullback to get that gap fill. Okay. Now, understanding the different types of gaps that are out there can help you prepare and plan for whether the market should just get up and keep running, gap and run, or gap, fill the gap, and then run in the direction of the gap. Or when we have an exhaustion gap, price just tends to keep moving in the direction of the exhaustion. Okay. And then we'll look for the opposing supply. So we have the potential on the IWM and the Qs and the SPY, not so much on the diamonds yet, for that runaway gap and the breakaway. We are expecting because the gap fills, so I'm going to lean a little more towards waiting for that initial pullback after the open and then looking to splice in to a move potentially back up. Okay. All right. All right. So we're seeing a nice little pullback. I do want to point out on the S&P, Price is in that dead space. Okay. We do have a fresh buy territory. The purple line here is our gap fill. And we expect the gap fill to happen most often when we gap up or down inside the prior day's trading range. And price made a lower low before it took out the sellers here. So our leg base group of candles, our zone that we're looking for is going to be lower in the range here. Okay. So we're already expecting the gap fill back down to 55.38 on the S&P. That might accelerate as traders, we had a nice little light volume run up at the close. Price coming back down to fill the gap might be presumed as bearish, and we'll look for the buyers down here about 55.21, 55.16. Okay. If price should go to the upside, we'll look for it to finish filling the dead space. Okay. Now, when we call this a dead space, what we're making reference to is that price is between a resistance and support area where price is touched multiple times on the support or resistance, okay? More than 3. The area in between is the filled orders, okay? All the orders have been filled over here. So this is like an area of a gap, okay? It can be a pocket of points, a light volume price run up or price run down. And when we have that dead space, often price goes through these areas, okay? So we're not looking for a lot of resistance to the upside or to the downside in this area, okay? But we are expecting a gap fill, okay? We are expecting contract rollover from the front month to the back month contract all today, okay? Excuse me. Still fighting that cold. All right. So S&P, our Globex range is narrow relative to the daily ATR. Now, a narrow Globex range often leads to a good trend environment, okay? So from a time-based chart, 20-minute chart, I'm going to look down in this area for a leg base, and we'll finish setting up the rest of the trade setups, okay? All right, so down in this range right here, we're looking for the leg base group of candles. You need to adjust your time frame up or adjust it down in order to find it. It is a wide range on a 4-minute chart. Now, you don't need to be afraid of the wide range. When you look at your leg base group of candles, and you see that the leg candle leaving is smaller than the leg candles in the zone, often this is a proximal line entry, and the zone can only be used one time. And it just happens to be right around where the gap fill is at, okay? So as we're waiting for the potential pullback to the gap fill area, we have a zone, 55.37. We don't expect price to go too deep into that zone. And that'll be a place where we could look for our long opportunity right around in that range there, okay? NASDAQ, also inside the prior session's range, an inside day. Gaps often fill the same trading day, okay? We've got a pretty sizable move to the downside for that gap fill, okay? The markets are gapping up at the moment, like the Qs, okay, which is going to be, people are going to be feeling bullish. And then if price starts to pull back on them, they'll quickly panic and jump out. Okay. All right, let's see, where else are we here? Okay, so let's also on a time-based chart. We're going to look right down in this area for that leg base. And it looks like we also have a wide range. Need to adjust it down 4 minute. Now we use the leg base group of candles as a reference point. Okay. We've often seen that when price changes direction or price pulls back and we have a nice up move, if you look over to the left, that group of candles is present very often when price changes direction. Our use of the leg base group of candles is that over time, when we come back and look at peaks and valleys where we have desired to make a trade, when we look left and we isolate that leg base group of candles, we often see that price changes direction. Okay. Now, there are a few more elements around it, but when you start seeing that peaks and valleys have a very specific group of candles, and you can get some details of how far price should go into the zone, whether the zone or that area can be used twice or only once. Okay. Once you verify that information several times, and you can also see that the gap fill is right there at the same place as our zone, 19,295-ish. Okay. We're expecting the gap fill. Okay. We're not expecting price to go deep into the zone. The leg candles leaving are smaller than the one in the zone. We're expecting this to kind of be like a hit and run type scenario. Should price go deeper in the zone, it would not be the pattern that we're looking for. And we just make some changes. Okay. All right. So Dow, also an inside day, but a very narrow Globex range. When you have a very narrow Globex range compared to the daily ATR, this is good news. Okay. It often leads to a trading environment where we have some good longer running trends. Okay. For today's session. So inside day, we're anticipating the gap fill. Okay. With a narrow Globex range, we're expecting there to be a more trending market environment. Okay. As you go out and look at the CME group, and I'm encouraging everybody to go out there and see if the contracts have rolled from the March contract to the June contract yet. If they have not, then we would expect sometime during this morning session that they would be selling off the front month and then starting to move to the back month. So who is trading all of that back month contract right now? A lot of novice traders. Okay. Banks and institutions have not shifted from the front to the back month contract just yet based on the volume and open interest that we just went and looked at the cmegroup.com. Okay. Verify your information. We do expect a bounce and a long running trend probably from about midday. Okay. Now, on inside days, we don't take breakout trades. We stick with zone entries only. Okay. We anticipate price to come back down for the Dow. Let's also take a moment and go look in this area. I'm going to put the little doji tool on there. Okay, we're going to look for that leg base group of candles. Been finding them more on the 4-minute chart. There we go. Right around the gap fill. Notice the leg base group of candles that we have on the chart right at the moment. Leg in, base, leg out, and base. The first leg candle leaving is smaller than the 2 leg candles in the zone. This is often a proximal line entry, and the zone is only used one time. Market open. All right, we're still doing pretty good on our nat gas. Still looking for that target, 3.954, 950. Crude oil has returned to the 5 p.m. and pit close. Look in this area for that leg base group of candles. We may have a potential long opportunity here. Okay. Very often prices attracted to that 5 p.m. and the pit close. Okay. We're still waiting a little bit longer. We had the valley, and I'm waiting for about another 24 minutes or 28 minutes or so before looking to take this long out of the zone. Okay. Nat gas, also looking for a price to change direction using the peaks and valleys and just kind of extend it over so you can see about what time that should come into play. Gold made a new high today in the overnight session, has quieted down since the pre-market session has started to come underway. Platinum right at the breakout area. Copper looking right now as it's pulling back to demand, 4.84, 4.79 area. Our nat gas, and one of the reasons I was bearish on nat gas taking the trade to the downside was one of these diamond formations, a continuation pattern. Okay. These can lead to reversal patterns like diamond tops and diamond bottoms. Okay. But notice that the move into it is generally the move out. Okay. So 60-minute chart on nat gas, currently in that downtrend, and looking for this diamond pattern here to continue its move. Okay. British pound right at support. Canadian dollar broke above the resistance. Okay. Price coming back down below that area. We have a dead space where price can easily move. Okay. So a lot of information that we've thrown out at you today. Let's come out to our smaller time frames. We're expecting a gap fill. Okay. I don't have a way to get in short just yet. Okay. So let me preface that. Okay. I am expecting price to fill the gap and pull back. Okay. But I use very specific rules to engage in when I'm getting into the trade. It's not just hit the button and hope for the best. Holy smokes. Just saw a big gap up. That was a quick move. All right. Bank index, also a very good odds enhancer, the BKX. Okay. Price above the moving average, we tend to see more bullish moves. And below the moving average, we see more bearish. Okay. Now, this doesn't make a trade for me. It just helps me be sensitive to market conditions. Okay. Market conditions. All right. NASDAQ. NASDAQ stocks. Apple is holding its gains as it gapped up. We see Broadcom also a gap up. NVIDIA. Meta. Tesla. Amazon. Alphabet and Microsoft all showing nice gaps to the upside. Now we are gapping up inside the prior session's trading range, so we do expect that gap fill today. Okay. I know it's way down here. We need to find a way to get in short with that piece of information. It doesn't mean just take and pick a top right now. We have no fresh accumulation of sell orders being built yet. Okay. That might take a little bit longer with the bullish sentiment here at the open. Taking a quick look around at conditions for the market. We often use the 10-year and the 2-year yield versus the US dollar to tell us if the conditions are more favorable for trading or if they're going to be more hostile. Okay. We like to see that the dollar and the 10 and the 2-year yield are going in the same direction. Right now, US dollar is moving lower while the 10 and the 2-year yield have been moving up. So ideally, the market conditions are a little bit bumpy, as we've already described. Okay. And we're going to be waiting just a little bit longer for our trade opportunities. The pre-market indicator, even though we had a lot of stocks gapping up, the pre-market indicator that measures trader sentiment at the open was not really committed to a move up. Okay. Our trend, dollar sign trend, is low. Okay. Trend low, time to go. Our VIX, with the markets gapping up, our VIX is showing a little less fear in the marketplace. Okay. So we're setting the stage of what's going on in the marketplace. Setting the stage does not always mean that you have a trade opportunity. Okay. For the NQ, we are approaching that resistance area. Let me just shrink up the chart a little bit more. Okay. And we have a supply zone up there about 19,655. Okay. We are expecting the gap fill. We look for zone entries only on inside days. S&P. Okay. NASDAQ. NASDAQ is up in our supply, and we do have another leg base right up at the prior session's close. We only have one economic report coming out at 10 a.m. Eastern. Dow almost got that gap fill. Russell. Okay. If Russell is approaching a supply zone, and I'm going to look to take a trade short in the supply zone. And I'd like for it to happen right close to the quarter hour. Okay. So looking at the leg base group of candles here, you can see that the leg candles leaving are bigger. Okay. Now, when using Fibonacci retracement and extension, okay, good question over here. Hi, the cracky. You don't need to be afraid of the opened. We just have to anticipate that there might be a little more volatility. Okay. Or around the news. Often the news is the catalyst that shoots price up into supply or drops it into demand. As traders do back away from the market, they stop trading around news and pending events. Now, the lack of trading means that the volume has dried up, okay? And then when the news comes out, price jumps up or jumps down to find where the active open orders are to support price. I mean, price only changes directions when we have order imbalances, okay? So a gap up into supply or a gap down into demand on a news event is often a great place to look for a trade opportunity. The leg-based group of candles is a very good place, especially when using Fibonacci measurements, to draw using the distal line to the drop to get a good accurate measurement. And as we see the leg base over here, leg candles leaving the zone are bigger than the one in the zone, which often leads to price going deeper into that area, that zone area. And that measurement being the 88.6% retracement into that zone allows me to choose a price level that I'm looking for price to hit inside that zone before turning back down. 2025, 30 cents would be that area inside. That will also reduce the risk. A trader can wait for price to come in the zone and then leave the zone as more of a confirmation entry. Okay. Now, as price comes into that zone, we notice that a lot of zones, a lot of time when price arrives at a zone on the quarter hour, the trade has been more favorable. We've had a more favorable outcome. Okay. We are still an inside day and looking for the gap fill. Gap fill is down here, and we have a demand zone 1996. That would be our profit potential. Okay. So not only are we looking for price to come into the zone, looking for it to go deeper into that zone, okay, we're looking for it to arrive on time, meaning the quarter hour, and that's in 3 minutes. Okay. So if it arrives early, price often goes through that zone. Okay. You can get a small move out of it, but often if it arrives early, it will take out the zone or the area. Okay. All right, let's come back over to the S&P. NASDAQ hitting that resistance area. 78% of the time, price will pull back off of resistance or support. Price coming back down should be fairly fast going through that dead space area. Right? S&P, not quite up there yet. We got the dead space. And we do have a leg base group of candles right in there now. So prices arrived there earlier than the quarter hour. So we'll look for price to come up. And then if it starts coming back down, then we'll catch it on the move down, expecting the gap fill. Okay. Let it come up first because it has a high potential. It's going to violate this little area that I've marked as supply. Okay, so we're just about to the quarter hour. Okay. Now I'm going to go ahead and set this trade up on the Russell. I'm just going to keep with a couple of micros here. We've got a good potential profit if price does come back and fill the gap. So even taking a couple of micros can reduce the risk on the trade when you have a large profit potential. Okay. You can still do pretty good off of just a couple of micros. Okay. Now we're about 1 minute away from the quarter hour. We only have an economic report at 10 a.m. Eastern. Okay. Setting this trade up ahead of time, I'm going to look at that 20,000 or 2025 $5.60. Okay. Okay, order is placed. My stop loss will come in here at 20,000 or 2030. Okay. And I'm just taking a couple of micros on that. Quarter hour, it arrived on time. We're looking for it to come in, go a little deeper into the zone. And then our profit target. Let's just outline this. Stop loss. Now, if we do this right, we'll take the trade short, manage our risk, and then when price comes back down, okay, let's sell off the front month contract. Okay, and then they want to buy the back month contract, they're going to let price fall. Then we have some potential opportunities to take a trade short, and later on take a trade going long. Come on, get up there. Just a couple more ticks. Bond report. Well, I was hoping it would trigger for us. Let's see, our net gas. Net gas, we're still waiting for a profit target. Platinum. We still have the breakout trade. Now in the platinum trade, we do have a nice pocket of points over to the left. Okay, price is just now breaking out of the on the platinum potential profit target. Now look inside of this, make sure you manage the risk based on your personal trade plan. Okay, taking the breakout trade now, you're a little bit late. Okay, so your stop loss would be somewhere down a little too far away. Okay, all right. What else do we have going on here? Canadian dollar breaking to the upside. And we have the 30-year and the 10-year right at support. 5-year chart gets a little messed up around contract rollover and such. Okay, now let's set up the S&P. Okay, price is at resistance. We have a potential of a supply zone, 5612. Okay. And again, we want price to arrive on time. Did we get our Russell? Okay, Russell hit. Our stop loss is in place. Now take a moment. Find out what your max risk is. We got $47 risk on these two micros. Okay, now if you're still a little unsure about the market turning to go back down, okay, then just take the trade as price leaves this area. Okay. If you're okay with taking the risk right now, understanding you have about $47 worth of risk here, okay, fantastic. You still have that risk. Okay, doesn't mean the trade's going to be profitable. Now, if you want to wait and get a little more confirmation, then you can sell stop market 2023, and then we'll look for our profit target around the gap fill. Okay. How are we doing with our Dow? Dow is right in that dead space as well. Okay. Let's get ready for the NASDAQ. Okay. You see that the stocks are still okay. Okay. Getting a nice little bear market rally. Now, how do we know it's a bear market rally? Kind of a short squeeze. Well, we come out and look at our internals. Look where the trend is at. When the trend is low, it's time to go. What the trend measures on the New York Stock Exchange here is the number of advancing issues over declining issues, advancing volume over declining volume. As the indexes move higher, there's more selling going on. That's why we make a quick reference to understand, is this a market condition that has a lot of buying going into it? Therefore, the trend would be on the other side above 2. Okay. Or are they selling into this up move? Okay. Now we're already expecting the gap fill. So what this measurement is telling us is that they're selling into this move up. Okay. When the trend is low, it is time to go. When the trend is high, it is time to buy. Okay. So keeping that rhyme, you have to look at the market conditions. Okay. Understand those conditions. As the NASDAQ is approaching supply, as the S&P also approaching supply, there is more declining volume and declining issues over advancing issues. Okay. We got a nice potential place down here for the gap to fill. Often when price gaps up or down inside the prior session's range, the gap fill happens most often. But we need a way to get into it where we can manage the risk and have good profit potential. Okay. Now, I'm not saying the market's just going to totally fall out of bed, but this is a good entry potential profit target where my risk is small compared to the potential profit. Okay. Every trade involves risk. Okay. So this, excuse me, we're still waiting. Okay. Yeah. We see the S&P is right there. We got that little speed bump area. Okay. Now we're just starting to show the diamonds. DIA is right about the at the point to break away. Okay. We did have a breakaway gap, but we also potentially have that measuring or runaway gap. Okay. Canadian dollar moving up. Nice little breakout on Canadian dollar. Looks like platinum's pulled back just off of that resistance. Copper is still looking for demand zone entry. Swiss franc coming back down inside that gap area, reverse leg base, about 1.13. The 5, 10, 30-year bonds and notes are not rallying. Okay. So that still makes me suspicious of the move up on the equity indexes. Oh, nice entry. Anybody get the entry on the crude oil? Very nice. Now you'll see very often that 5 p.m. and the pit close, prices attracted back into that area. If you have a leg base group of candles, okay, in that area, there could be potentially a nice trade opportunity there. Okay. Still waiting on the S&P and the NASDAQ. We're 4 minutes away from the economic report coming out. Consumer sentiment. The consumer sentiment report reflects what was going on last month, not this month. Now, if you can think back about 4 or 5 weeks ago, was the market feeling pretty bullish or was the market bearish? Okay. Take a look back at the calendar. Where was 5 weeks ago? What was your mindset 5 weeks ago? Okay. When this report came out. Okay. Because what happened in prior to is going to reflect. Okay. That sentiment there. Okay. Let's see. Indexes. Like Russell's squeezing on us. Three minutes away from the economic report. It looks like I may get stopped out here. Okay. All right, nice little pullback. Okay, we could expect a bounce here off of the NQ. Don't try to short this yet. We've only got, this is our third touch. Let price bounce back up off of this area. S&P. Yeah, we don't even have three touches yet. How about our Dow? What was in there? All right, let's get this one running. How's our net gas doing? Euro's pulling back, so the FX markets are pulling back pretty sharply right now. Holy smokes. That's a good one, huh?
It is open. Order filled.
Happy dance. Ha 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 ha. Hopefully that answered your question about whether you trade in front of an economic report, huh? Our stop was in place. Okay. And we're still looking for the gap fill. Okay, I didn't have an entry on the NQ. Well, if that tells you a little bit about liquidity, there's not a lot of buyers yet. Nice, Abdallah. You caught it on Russell, or which one did you catch it on? Super job. Super job. Okay, so I'm gonna let this settle out a little bit. I still only have $47 risk on a trade, and we're looking for that potential profit target down there about the 2000 to 1996 area. Nasdaq held our leg base. That was a nice little drop out of there. Okay, we got another zone up above, larger time frame. Crude oil coming back down. I think this market's going to continue to drop now. It kind of spooked a lot of folks there. Okay. We'll see if it resumes the trend. We got 1, 2, 3 touches. Okay. We're still expecting the gap fill. And we do have another leg base. Okay, so the stocks got a small drop, but not much follow through to sell off. Okay. So what we need to see is we got lower highs and we need lower lows in order for those trends to get established on some of these stocks. Okay. You have a leg base right up on top. Yeah. Went right through the dead space. Yeah, I'd like to, why don't we take a moment now? What we'd like to do is give away two $50,000 accounts. Okay, and these are to everybody in our YouTube live. We'd love to get you involved in with the Elite Trader Funding, one of our prop accounts. What should we do for that? Anybody that took the Russell trade, okay, if you type, I took the Russell trade in YouTube, we'll set you up with that with one of those accounts, okay? I took the Russell trade. All right, looks like we got Jerry and you guys keep an eye on that. These are compliments of Elite Trader Funding, one of the prop accounts, the prop firms we're working with to help you get certified, okay? It's one of the evaluation accounts, starting off with 50,000, okay? Okay. We do want to give a special thanks for Elite Trader Funding and their support in helping you guys get involved with the prop account. If you've struggled with your personal trading and your personal account, give a prop account a try. Okay, now there are rules and things that you need to understand and put into play. Okay, so it's just not just jump in and go crazy. Okay, you want to get qualified. On their homepage, they'll tell you you get to keep the first $12,500 once your account is funded. Okay, so very good opportunities there. So, and thanks again, Elite Trader Funding, for providing us with those. All right, we got a winner from Zoom and we got a winner from YouTube. Fantastic. All right, so crude oil came back down, retesting the 5 p.m. and the pit close. Heating oil, not yet back in the uptrend. So I'm just a little reserve on taking the trade on that. Whoa, that's not good. Little whipsaw on the nat gas there. Okay. But price has come back up to the late base. Get my stop loss in place there. Okay. Oh boy, look at NASDAQ. Almost got it. Strange. My 1 second. Looks like my battery has. Mouse battery went out. There we go. Always have a spare one. Okay, still awaiting an entry, either in our supply zone or back down in our demand zone for the equity indexes. As we described earlier in the pre-market, we are waiting for that gap fill, okay? We expect to gap fill a high percentage of the time, okay? When price opens inside the prior day's trading range. Taking breakout trades right now are elevated risk. Refrain from taking breakout because you're seeing the whipsaw and the choppy markets going on, okay? And seeing all that whipsaw and choppy markets, you recognize it's an inside day. You recognize that often gaps fill the same trading day when price gaps up or down inside of it. This provides you with a good trading opportunity once price gets there, okay? Exercising patience in these markets is not easy. Okay. I mean, it's been one of the biggest challenge for me over the last couple of days. Wow, the Dow went right into that zone, pulled back out of that. I feel sorry for some of the folks that trade, like on a 20 or 30 or 60-minute chart. I mean, watching that P&L go up and down, that's crazy price movement. I like using the tick charts. They give me a little when I'm approaching a higher time frame supply or demand zone or an area where I anticipate a trade, and I'll drop down to the tick chart and see if I can manage my risk a little bit better. Okay. Smaller risk. All right. The trend is low. Okay. There's more down volume over up volume. There's more down issues over up issues, or more declining issues over advancing issues. Okay. The trend is a very big odds enhancer, but it doesn't tell you just to get in right now or just get out. Okay. It takes about, once the trend closes below 0.60 or closes above 2.00, you have about 20, 30 minutes, and then you'll start to see the change. Okay. Then you'll start to see the change. Stocks take longer to respond to news. Okay. So you have the reaction on the futures market, and then you have the reaction in the futures market, and then about 15, 20 minutes later, then you'll start to see the stocks going in the direction of that reaction. Man, I can't believe that one was so close. Yeah, so make sure you have marked on your chart where you have the gap fill. A lot of information I shared with you in the first part of our live trading room. Okay. Help you understand what the conditions were for the potential trade direction. Now, it may not have given you a way to apply a trade at that moment in time. Okay. But it did show that, hey, we're looking for the gap fill inside day. Breakout trades have been whipsaw and choppy. Okay. Volume is shifting from the front month to the back month contract now. Okay. And we should be prepared that, people getting out of the March contract, selling, and then buying the back month contract back down at demand. We could have some very nice swings in price today. Part of that information for the swings in price, we're taking a measurement of the Globex range and then comparing it to the daily ATR. Okay. When we have conditions where we have bigger swings in price, more profit potential, often the Globex range is narrow between 0 and 40% of the daily ATR. Okay. Now, that doesn't give you a trade right at that moment. It just helps you understand and navigate which direction to go. Now, if price comes back and fills the gap, then I have the opportunity to go long. My expectations based on the leg base group of candles is this, even though it's a wide zone, price may not go deep into that zone. Okay. And its zone could only be used once. So it's like a hit and run. Okay. All right. Now, there was a second chance to get into the Russell, okay? This zone can be used twice if you look at the leg base group of candles. You isolate that and then you look at the leg candles leaving versus the leg candle in the zone. Now, more often, price does a proximal line entry first and then second goes deeper into the zone. Okay. But there are occasions where price goes deeper into the zone and then comes back up and retest it. The point is, once you recognize the leg base group of candles, you can anticipate if the zone can be used one time, proximal line entry only, or if the zone can be used two times, where you should plan for that 88.6% retracement into the zone. Speaking of Fibonacci, we have a class coming up today. It's a little showcase class, about 30, 45 minutes to an hour. Okay. Well, we're going to talk about Fibonacci measurements. Okay. Using them along with finding an entry. Okay. And using the Fibonacci measurements, where do we start measuring from? Okay. So that will start about an hour after we complete this session. So in about an hour and 15 minutes. If you'd like to be part of that, look for, you can register. I believe there's an email that's gone out there. Let's see. Yeah, team will post a link for you to register and be part of that in the chat and in the YouTube session. This will be open to everybody if you want to learn a little bit more about how to use Fibonacci measurements. Okay. And let me just preface, Fibonacci measurements alone do not make the trade. Okay. But the measurements do give us some consistent approach. Okay. All right. Yeah, I don't see it in our Zoom chat, the link. Okay. Okay. You guys got it covered. All right. Still expecting the gap fill. And it appears that I didn't have an entry on the S&P. Not yet. I might have to wait those ones out. We did have an entry on the Russell. Trend is low. Oops. What's going on? There we go. But yeah, it's like we're just kind of waiting for the gap fill. Okay. Now you should have your zones drawn near the gap area, the gap fill area. Look for your leg base group of candles. Okay. Yeah, I see that the uh, the links are now posted. Okay. Oh, hi, Andre. Let's see. Leg out. let's see, let me grab that question here. Yeah, what we look for is if the leg candle leaving the zone is bigger, okay, or smaller. If the leg candle leaving the zone is bigger than the leg candle in the zone, often the zone can be used 2 times. Often the first is just a proximal line entry, while the second price goes deeper into the zone. Okay, that happens more often. If the leg candle leaving the zone is smaller and the zone looks wide, and the leg candle in the zone is wider than the leg candle leaving, often that zone can only be used 1 time and it becomes a proximal line entry. Okay. Yeah, we do offer some, we do have some YouTube videos that are out there to talk a little bit more in depth on that. We do have some course material that goes much deeper into that, so you can start training your eyes. Okay. For example, if we're looking down here around our zone, okay, and if we look down at the area and we look and see that, hey, the leg candle leaving is bigger, then we would anticipate price to go deeper in the zone. You can always set up a proximal line entry, but if you're prepared for price to go deeper in the zone, then that would be less risk on the trade. Okay. Good to see you, Miss Chris. Hope everything's all right. All right, crude oil. I don't have any strong indication that price has changed trend on the heating oil. I'm looking to determine whether I want to get into crude oil and see price movement up, but I'd like to see heating oil give us a little more of an odds enhancer. Okay. Oh, sorry. Heating oil and gasoline are often a good odds enhancer when trading crude oil. Heating oil and gasoline tend to move in price and the crude oil follows. Okay. So waiting for heating oil to break up from that downtrend, even though it's a smaller time frame, and then we'll look for that move up. Okay. All right, markets have quieted down. Okay. So I'm looking forward to doing our Fibonacci showcase. Now, this is just an overview. Okay, there's always going to be some good nuggets in that. The Fibonacci measurements are important to us folks that think like engineers. Okay. When verifying price patterns and verifying pictures on the price chart, often the measurements give us a good confirmation. Okay. Now, the measurements themselves do not mean that you're going to have a profitable trade. Okay. But making sense out of price patterns, having specific measurements and then finding them. Okay. Once you start to find those specific measurements that work, then you start stepping away from that. Okay. And we're going to explore some reversal patterns, mainly the double bottoms, double tops, because they have such precise measurements. Okay. Using an 88.6, which is a square root of the 0.618034, the Fibonacci numbers. Okay. So it'll be a good source. The Fibonacci measurements are often overlooked by a lot of experienced traders, but novice traders tend to like them, but they're always drawing them from the wrong place. And this is why they tend not to get the desired results. Okay. Fibonacci measurements do help us locate an area, but we still need to refine that area and look at the information, what happened before and what happened after, so that we can see the results of having a specific measurement or that anomaly on the price chart. Okay. So we're going to have a lot of fun with that. A lot of aha moments will come out. That'll be about an hour after we get done with our session here in just about 5 minutes. Okay, we do have support down at this range now. We have 1 touch, 2 touch, 3 touches now. Okay. Now, in part of identifying a place to take a trade, support and resistance are key levels where we have unfilled, or excuse me, filled orders. Now, the more time that price came down and hit this level, okay, making it a support, you want to say that, hey, there were more buy tickets than sell tickets. Now, the more times that price hits this area, the size or the amount of those buy orders keeps getting smaller and smaller. Okay. This is why support and resistance levels are great opportunities when you're in the right market conditions and the right trend. You can often see that there are topping patterns and bottoming patterns when you have this support or resistance identified. Once price breaks that support, then this becomes a new sell territory. And then you look for the leg base group of candles inside that range. And like a small example like up here. Okay. Now, even though I had a zone, price didn't go deep enough for me to get a trade. Okay. Having very specific trade plan and ways to enter your trade are very much a big part of what you need in your trade plan. Now, we mentioned that the NASDAQ was an inside day. NASDAQ is still an inside day. Breakout trades, as I've just set up right over here, are still going to be elevated risk. The environment says, yeah, price may break out, but it might retrace on you very quickly. Okay. Inside days, the breakout trades are very short-lived and can be very whipsaw. So looking just below that support, we can see that there's these little areas right here we call speed bumps. That is an additional clue. Inside days, refrain from taking a breakout trade. Wait for a supply or demand trade. In order to get a supply zone trade, we would need to see price break that support, retrace back up to a leg base group of candles. Then we would look to resume the trend to the downside. Spending enough time to identify picture perfect past trades, you then use each price pattern as a map to help guide you in the direction that you should be trading, and understanding that the market conditions taking breakout trades are going to be elevated risk, meaning you have a good alert of when to wait. Inside days, as we still have on all the equity indexes, okay, are a choppier market condition. Trades often taken after 10:30 to 11 a.m. Eastern tend to have better follow through when we're on inside days. Okay. So a lot of nuggets get dropped every day in here, and it does take time for you to put all the pieces together. But once the pieces are together, then the trade opportunities can be pretty easy to follow. You can understand your risk before getting into the trade. And then you can lean on saying, okay, well, how many times out of 100 did we get that gap fill when price gapped up or down inside? Having those statistics will align you with the trade. Oh, great. We have a lot of folks getting ready to join us in the Fibonacci class. That'll be a great little one. And I'm going to wrap up this session right now. And we'll see everybody in about 60 minutes. Happy Friday, everybody. Be patient. Understand that we are waiting for the gap fill on the equity indexes. Okay. And that's going to require being patient a little bit. Okay. Super Friday, everybody. Have a great day, and I'll see you guys in about an hour in our Fibonacci showcase. If you'd like to get access to that, just click on the link in the Zoom or in the YouTube, and we'll see you in about 60 minutes. Have a great day, everybody.